Hi, Andrew. Thank you for having me. I am Becca, the newest recruit to Darlington's BDM team.
Mhm.
So I have worked for Darlington for 13 and a half years.
Well,
Um, the last 8 of them was Mortgage Advice Direct.
right.
And I've moved across to the BDM side of things.
Yeah,
So I am 7 months in to having a patch as a BDM.
brilliant. And how are you finding that?
Yeah, I love it. I didn't realise how different it would be from client facing to business, but
Mhm.
still love it. Still the same
Yeah,
outcome, I suppose.
yeah.
So Darlington, we have been around for 170 years.
Wow. I
I
didn't even
know.
know that myself, to be fair.
And we are a small regional building society in the northeast of England.
Yeah,
But we
brilliant.
do look after England, Scotland, and Wales on the mortgage front.
Right. Okay, yeah. So I know Darlington as well, obviously from Swansea. We've got our local building society that's doing really well in Swansea, but also do well in the mortgage market. And then Darlington, I do feel like they're that similar kind of
Yeah.
lender because they exist nationally, but they are obviously a very good, quirky lender for us brokers. There's quite a few, say, buy to let or random cases where it doesn't quite fit with a high street lender. We have found that we've, ended up going to Darlington quite a few times. So yeah, I, really respect Darlington and what they do. So yeah, so we're just
Brilliant.
going to move on to a couple of topics today. So we've been talking about a few things, AI, how that's affecting the market, maybe how, Andy Burnham and the latest political changes can affect the market. But the main thing is we want lenders, or we want customers, I should say, we want customers to understand the different types of lenders that exist. So they know what their USPs are, why, say, a Darlington coexists alongside other high street lenders or other off the high street lender. So they can really see why there might be a benefit to having a shop around rather than just using mainstream. So yeah, so we'll start with Darlington's main USPs. So what are Darlington's like standout, say, I don't know, 5 to 10 USPs as a lender?
Perfect. So what we did last year is try to identify the key areas we wanted to be playing in, I suppose, as a more kind of specialist lender.
Mhm.
So we broke it down into a few key areas, and there was a few bits on each of them where we go, actually, we already do this. Let's get it down there and let that be kind of where we are marketing ourselves. So I think one of the main ones, and it bolts onto every piece of our criteria, is an enhanced LTI.
Mhm.
So we will look at up to 6 times loan to income, up to 90% loan to value.
Wow.
Now, with that, there is no minimum income requirement in the background. So, of course, it does need to meet affordability. It's not
Yeah,
just 6 times for kind of everybody across the market.
yeah,
However, not having that minimum income requirement does mean that even if we can't get right up to 6, we can still get over 5 for people, say, that are earning less than 30,000.
yeah,
So there is a little bit in there, and that isn't just for first time buyers. That is for your later life lending. It's for your expat lending. So it's a bolt on across the board, which I think that is why it's kind of really quite popular, and we do see a lot of cases over 5 times loan to income.
right. Okay. And my question to that, sorry to butt in, but my
Mhm,
question to that would be one of the main concerns for brokers has been if there's a higher income multiple,
mhm.
how are, how are they protecting against, say, for example, people stretching too much? So people going so far with a low minimum income,
Mhm.
is that, do you as a lender see it as a risk, or do you actually think no, based on what the FCA have said with the whole, we're probably over, being a bit too much on the other side with lack of affordability because there was a gap in the beginning, wasn't there? There was a gap for affordability.
Absolutely. So what we've got is we have got the national statistic guidelines to follow. So obviously, with a lot of first-time buyers that have maybe not had a mortgage before, it's really difficult to go, I am I am spending X amount on my utilities
Hmm.
because we don't have that data.
No.
What we will use is we will use the national statistic data.
Yeah.
If it has been keyed higher, so say,
Mhm.
for example, the national statistics, maybe £150 for a sole adult. If it's been keyed as £200, we will use the £200 that's been declared, so whichever is higher. So we do have that ONS model where we don't just take it at face value that actually groceries are going to be £150 a month.
Yeah.
That wouldn't be realistic for us for groceries, not everything else that goes with it, I
Yeah.
suppose. So we
Yeah.
do sense check in that respect.
Yeah. That's a good one actually, because as much as we don't want to see it as brokers, it can be a bit of a killer.
Yeah.
I think you kind of need it if you're stretching the income,
Hmm.
because some people really will have higher bills than they look like they have, or what the ONS figures do show. So yeah, that's a really good thing. And yeah, what other USPs have Darlington got then?
So I've kind of just briefly mentioned the later life lending.
Hmm.
So we have recently just won an award at the Financial Reporter Awards for the later life lending.
Hmm.
So we are again quite strong in that space, and a USP, I suppose, that we take for granted probably because we've always done it. And I know, especially when I was in the direct space, a lot of the lending that we did was later life.
Yeah.
Um, Now we will go up to age 99 on a repayment mortgage.
Yeah.
So what we tend to see a lot of is remortgages into that space.
Right.
So clients that have maybe come to the end of an interest-only mortgage
Hmm.
without a repayment strategy.
Hmm.
Initially, the conversations might be that we need another interest-only mortgage because we don't think we have another option.
Yeah.
Whereas we can actually, generally speaking, if they're 70, 75, go, actually, we can take this up to age 99, keep you in your property. We will base it all on pension income,
Yeah.
and anything that's passive. So um, unencumbered buy-to-let properties in the background where there's
Would
no
have to
kind
be
of,
unencumbered with it.
they don't need to be unencumbered. But the one thing I do say with that is if they have got mortgages on, we really need to be mindful of the term, because if they've got an interest only mortgage on and that's to be sold,
Yeah.
that income could potentially go.
Yeah. It's more of a risk from a risk perspective. It's a lot
Yeah.
safer, isn't it? And for customers who are going to be watching this, obviously unencumbered means that property doesn't have a mortgage on it as
Yeah.
well. So there's obviously later life lending. You said remortgages as well. That is really good because there's only a
Mhm.
handful of lenders who'll really lend like that long. Does that involve having to have life insurance in place till that age or anything like that? Is there any quirks that you need to get that mortgage other than that?
No, no. So just again needs to meet the affordability.
Hmm.
Loan to value will be restricted. So we would need, if we're doing a purchase and the
Yeah,
applicants are already retired, so we can
yeah,
take employed income to age 75 if the applicant is intending to work till age 75.
right,
If the applicant is already retired, we would cap that at 70% loan to value, so 30% deposit.
right.
If the applicant is still working, but we are taking the mortgage beyond age 75,
Mhm.
we would cap that at 80% loan to value.
Right, okay. Yeah,
90% ends at age 75. The mortgage would need to be repaid by that point for a
yeah, and that's
90%
fair enough,
mortgage.
because it's obviously a more high risk mortgage.
Yeah.
So you've got the later life lending model as well.
Hmm.
What would you say as a lender is your main priority? What is your like, is it residential? Is it buy to let? Is it holiday let, limited company? What would you say your main areas are as a lender?
So our main areas as a lender, so we have looked to increase kind of volumes on the buy-to-let front this year.
Hmm.
So we have gone into the limited company space. We
Hmm.
have gone into we've really kind of tightened again what we're doing. So we split it into four kind of key areas. You've got your first-time buyers, you've got
Hmm.
your more specialist residential lending,
Hmm.
your buy-to-let lending, and your self-build.
Hmm.
So residential will always be the bulk of what we're looking to do.
Yeah.
But the slice of, I'd say, buy-to-let lending has increased from where we were probably last year.
Okay. Yeah, but the so you're saying that the slice that you would prefer as a lender, you'd prefer residential, but obviously you do like to specialize in buy-to-lets and
Yeah,
limited company, and holiday, let's say, as an extra. But your core priority is residential then.
yeah, absolutely. It's the car. It's kind of the bread and butter of what we do. But when we kind of looked at our buy-to-let proposition, we're not in the portfolio space for buy-to-let. So with ourselves, we class that as three or more mortgaged buy-to-lets in the background.
Hmm.
So we've kind of gone, where do we sit? What business do we want
Hmm.
on the back of that? So we've placed ourselves at the very beginning. So the first time buyer, first time landlords, that's where kind of we see ourselves as kind of helping your first time buyers still getting onto the property ladder, because I don't know about you, but I know certainly from I'm from the northeast. You might be able to tell by my accent that a
No.
lot of
Yeah.
a lot of people aren't kind of a lot of the younger generation are looking to kind of probably diversify their income streams.
Yeah.
So what we're finding is, I mean, the properties up north are a lot cheaper than probably down south. So we are finding that we're doing a lot up north on the buy-to-let front
Yeah.
for first-time buyers in limited companies, basically starting off potentially their portfolio, um, particularly popular under the limited company umbrella.
Yeah.
We do that at up to 80% loan to value.
Right.
We don't have a minimum income in the background.
Yeah.
Now, there we do need to see a background income from either employment or self-employment.
Hmm.
And we will do that on holiday lets as well. So obviously we've got kind of seaside town across the country, I suppose.
Yeah.
The caveat with that is it does need to be readily sold as a residential if it
Yeah.
came into possession. But
Okay.
but we run all that on rental yield, so we don't look at kind of background affordabilities for your first time buyers, first time landlords.
Mm. And that is quite a big
Yeah.
factor. Something that a lot of customers don't realize, I've noticed, is that, the first thing in their head, they've heard that buy to let, you need 25% deposit, you need equity, sorry, not equity, you need loan to value of at least 75%. When in reality, there are buy to let lenders that will do 15%, 20%. Obviously, it comes with its caveats that, that will mean a worse rental yield. It will mean that you are a little bit more tight on what you make on the property. But
Yeah.
it is a specialist kind of avenue, or it's a door for some people who maybe haven't got as much deposit. And specifically there, you said first time landlord, first time buyer.
Hmm.
Like that's in itself, it's brokers will probably know this, that it's so hard to pick two different criteria and then get a positive result. So if you get anything more than one little bit of criteria, you're thinking, oh God, this is going to start to be a can of worms. But when you're talking about first time landlord, first time buyer, and low deposit,
Hmm.
that is a really good combination, and that is a really good niche from Darlington, to be fair. So yeah, so really good thing so far. Is there any other, are there any other standout USPs from Darlington?
Yeah. I mean, I'll go with kind of the expat criteria.
Hmm.
So this is one that we've recently just enhanced. So expat residential and foreign currency mortgages.
Yeah.
So I think there's obviously a lot of expats out across the world
Hmm.
um, that are wanting to potentially buy a buy to let in the UK,
Hmm.
wanting to buy a holiday let in the UK,
Yeah.
or a residential property.
Yeah.
So we see all three. So just with the expat buy to lets and expat holiday lets, we can only do them in personal names, not under the limited company umbrella at the minute.
So that's if they're living in, say, I don't know, foreign country like say Dubai, with a lot of
Hmm.
British expats living there now, or even people not British, you're saying as well?
So
People,
they would
yeah.
need to have it. They would need to be British expats. Yeah,
Ah, they would need to be British.
yeah,
Okay, yeah. So say they're living there, they would need to do that in a personal name, not in a limited company name.
exactly. Yeah,
Yeah.
yeah. So we have just increased our loan to value on the expat residential front.
Hmm.
So we've gone up to 90% loan to value.
Right.
We are seeing a fair bit of that, if I'm going to be totally honest. new builds, we're seeing 5% deposit, 5% builder's gifted deposit,
Right.
90% British expat, again, living in Dubai, Australia. So we are still doing Australia, which I know has been a sticking point for
Mm.
some brokers that I've spoken to.
Which is strange, really, isn't it?
Yeah, so we're fine with that. There's kind of 16 currencies that we'll accept. Um, so again, yeah, totally fine. Day rate contractors, we see a lot of that as well.
Mm-hmm.
So
And how do
particularly
you do
around
that? Do you do that times 48 or do you do that, times the full? Some lenders do it with the weeks taken off for holidays. Like how many weeks do you times their day rate by?
46.
46. All right,
Yeah,
there we are. So it's
yeah,
day rate, say, for example, a contractor's on £240 a day, times by five, times by 46, I'm guessing.
yeah, exactly. So we need
There we
them in
are.
the industry. We need 2 year industry experience,
Hmm.
but we can take them from day one of their contract if they've been
Right.
in the field. So what we
Yeah.
ask for is more than half the contract to be remaining.
Yeah.
If we haven't got half the contract, we just need confirmation that that will be renewed.
Right. Okay. So that technically could work if they're employed then. So they've been employed and they just decide to just change up the way that they are structured with that company. And, or it could be with a new company, for example, a
Mm-hmm.
company's offered a better day rate or a
Mm-hmm.
better overall salary, but via the day rate. You could do that day one, but their previous experience must have been in that role.
Exactly.
Yeah, brilliant. Yeah.
Exactly. So we are seeing a lot of the expat, a lot of the day rate contractors, because I suppose when you are out overseas, a lot of them are kind of either fixed term contracts, day rate contracts. So
Yeah.
yeah, we do see an awful lot of that, and of course the expat buy to let front. We see quite a bit of holiday let in that space, and that's I believe it's because we do the 90-day personal use. So the people looking at that side of things might not necessarily be looking for a residential to be, sat empty,
Yes.
paying for the home insurance to keep it covered.
Yes.
Yet
Yeah.
they tend to kind of look at, actually we want to make a profit, but we also want a base when we come back to the UK.
Yeah, and that is quite a common one actually. You do see like, there's inquiries where someone's like not sure whether to get a buy to let or not, but their long-term plans are maybe to come away from this area or like you said, the UK. When in reality, if they've got a holiday let, that doesn't have to be let to anyone then. That is literally just there to make money off, as you've mentioned, via a
Yeah,
holiday let, Airbnb, etc. And then in your case, for 120 days of the year, they can live there. So,
yeah.
it's a no-brainer. So yeah, thank you for telling us about all Darlington's USPs. So my next topic, I guess, is a bit of a difficult subject for brokers and customers at the moment because we don't really know which way we're going here. So how do you think AI will affect the mortgage market over the next 5 to 10 years?
So AI it's prevalent, it's everywhere, and we know it is, and it is so useful, but it doesn't necessarily mean it's going to replace things. It's going to be useful for everything.
Mm.
So I think having the right people with the right knowledge in the right places to support these big transactions, the mortgage, is the biggest financial transaction that people will ever make.
Yeah,
So it is so important that we have still got the specialists in the area to be giving advice
yeah,
based on kind of experience and such. Where I think AI is particularly useful is for the admin side of things, to
yeah,
free up the time for the advisors to be giving that specialist advice, to be looking at kind of, your needs, your circumstances, and giving the best possible advice based on that.
yeah,
So I do think there is a place for it in the
yeah.
financial services world,
Mm.
but not to replace not to replace the people giving the advice.
Yeah, yeah, and I do agree. And don't get me wrong. I think because I know, my knowledge on AI is pretty good. I would say it's gonna, my personal opinion is it's
Mm-hmm.
gonna replace basic brokering potentially. Eventually. I'm not
Yeah,
talking in the next 5 years. I'm saying eventually. I can imagine with the AI models changing and with the FCA potentially allowing a broker past AI that's past CMAP, has gone to the point where it's allowed a broker,
Hmm.
that could replace a section, just like a sector that we can think of today has been replaced, for example, low scale web design. But for example, me as a broker now, if I want to do something to my website, I still want an actual person to sit down and speak to and just clear my brain, and just be
Yeah,
like, what should we do here? Because AI can do an AI website, but you're still missing key bits that you would want to speak to someone about. And even if it's a virtual robot, that's not the same as me and you speaking to each other,
yeah,
or a customer would just prefer to sit down with a human. The analogy I tend to use with people, I don't know if you're the same, is going to a baker or going to a butcher at the moment is exactly the same kind of circle that we're in when it comes to when they come to advice in AI, because people will by then just want to speak to a person, they want to go local. They'll
yeah,
be AI, but they'll be like, oh, I just want to speak to Andrew, or I just want to speak to X or Y or whichever broker. So yeah, I do think, like you said, it's not definitely going.
yeah,
It's not going to replace us, but there'll be a change, as the FCA have said, and that's the goal. It'll change broker as we know it, and hopefully help with bank statements,
yeah,
credit checks, and stuff like that. The way that we have phone calls inbound and outbound, but it can replace an element, but it's not going to replace everything.
yeah.
But yeah, as a lender, you can't see it being a major issue. Or if you're telling the customer now, would you expect them now over the next 5 to 10 years to be coming to you via AI, say?
I think that, yeah, I think AI is good for as maybe a starting point. Who do I need to speak to? Who is,
Mm,
these are my circumstances, and what broker, what lender specializes in this side of things. So maybe as a
yeah.
starting point,
Hmm.
like I say, to read data,
Yeah.
speed everything up.
Hmm.
But yeah, I can't imagine it will fully replace advising.
No, well, we're happy with that, obviously. Uh, but no, I think, it is good. And I think for the customer side, it's a good thing for our industry. It is a good thing, but it's more of an aid, not a replacement. So yeah, on that subject of AI, something that's baffled us as brokers is things just seem to be taking longer at the moment. And a lot of us, brokers, estate agents, solicitors, something that I don't know what it is about 2026. Cases just seem to be taking longer. So it's almost like we're in a sliding doors moment where we're going backwards before we go forwards.
Hmm.
So, like, what do you think is the reason for that? Can you put your finger on it yourself?
I don't suppose I can put my finger on a definite reason, but
Mm,
if I was to speculate, I believe it's the complexity in the cases, or probably linking back to AI.
mm-hmm,
We, I don't feel like, especially I've been out of advising for 2 years now, and the things that I see on the BDM broker side of things are a lot more complex than I ever seen when I
mm-hmm,
was advising direct. So I feel
mm,
like there's a lot more involvement, there's a lot more innovation with things. So different
mm,
incomes, how that's assessed, the
mm,
knowledge that brokers are required to have, lenders are required to have is kind of, it keeps just expanding
mm,
because of how to assess things. People are wanting to use kind of different incomes, going back to kind of, I think one of my first points when I was going through USP is about people are wanting to kind of get different income streams. So that's
yeah.
what we're seeing, and we need to learn how to assess it, what we're comfortable with. So I think there's a little bit of learning between us all.
Mm-hmm,
We're not seeing the vanilla that we used to see. What we're
mm-hmm,
seeing is a lot of different layering. So um, once upon a time, we probably seen very quite simple structures in income. We're not seeing that now. So we're seeing a whole range of different incomes, which means
mm,
that as a lender and the underwriting team, we all need to have that knowledge. And if we
mm-hmm,
don't have that knowledge, we need to learn.
mm-hmm,
So, a lot of it is a learning curve. It's about, are we going to be
mm,
comfortable? This may not be in policy. Are we putting it in policy? Are we making an exception? So I think there's a lot of complexities that are just getting more and more. There's a lot of innovation on the market where there's different
mm,
schemes. Limited company buy-to-let is probably a prime example.
mm-hmm,
Not exactly
yeah.
straightforward. so many
Mm.
different elements to it. So I think
Mm.
that adds to kind of the time scales. A lot of the time it's just kind of for us to get our heads around it and just go, actually, we are comfortable
Mm.
with this, but we don't see it
Yeah.
every day.
Yeah. And how do you think a solicitor, for example, so that's the lender
Hmm.
side. The lenders,
Hmm.
obviously, that's why their side can maybe slow you down. Or I wouldn't say slow us down, but that's that part. There's elements such as like a deed of postponement with the local government. There's stuff like that. There's speaking to a solicitor, then them getting hold of the local government. What can they do to improve?
I think a full overhaul of the process would probably be good, but that's asking for something really really big. I think it's quite an old-fashioned process in the
Mm.
in the world that we live in. It's something that's always, and that's no criticism to solicitors or lend or anything. It's just
Mm.
the way it is, and it's the way it's always been done, and we're
Yeah.
continuing with that. I think at some point things may change,
Yeah.
but I think it's not down to kind of the people. It's down to kind of there's so many different elements involved in a house purchase, I suppose. So it's
Yeah.
kind of we're relying on maybe dated systems, like
Mm.
processes that are dated
Yeah.
potentially. So I think there's a bit in that.
Yeah, yeah, I do agree. And maybe it's something that, I don't know if it is possible, but something that co-works in the background
Hmm.
with how the solicitor, like they use LMS or like they use these different platforms where they can access things that the local government can, or
Yeah.
the local government can access things they look at. And that, for example, with deed of postponement, I don't know how they do it right now, to be honest with you. I don't know enough about it, but if there's something that's slowing us down that can be sped up where solicitors or conveyancers work alongside local government, maybe that's one thing that could just speed it up a bit more. But yeah, so yeah, that's that. So yeah, so the last topic obviously is about mental health. Mental health as brokers, BDMs, underwriters, etc. How do you think we can be as people? What do you think we can do as people to be better to each other, I guess? And what do you go through as BDMs? Because we can see that you're obviously stressed as we are. There's a lot going on in the world with Iran, anything from that and what happened with Ukraine a few years ago. These things can have an effect in the wider market, just like click of a finger. You could be sitting down the beach and it's like being on call, isn't it? You're just going to
Yeah.
suddenly bolt back. So, yeah. So, how is it for you as BDMs? I guess is the first question.
I think it's important for us to stay calm.
Mm-hmm.
So of course, I think from my point of view, I've been on both sides. I've been with the client, and now I've been with the broker. So I've seen it. I've seen it through COVID with client. I've seen it through
Mm-hmm.
kind of the most recent with Donald Trump. I think it's just so important just to stay calm. We are on the same team. We've got a client at the end of it.
Mm-hmm.
We all are wanting the same thing. So
Mm-hmm.
we need to communicate. We need to pick up the phone and be having the conversations. It's no kind of, we need to work through it together, solution based,
Mm-hmm.
not kind of, well, this has gone wrong. And, if things have gone wrong, that's fine. But don't focus on the things that have gone wrong. Let's get the solution. How do we solve this?
Mm-hmm.
Working together, collaboration. I'm very, very, very big on collaboration. Like, I'm on your side, I'm on your team. I am
Mm-hmm.
an extension of you
Mm-hmm.
and your client. So use me as that.
Mm-hmm.
I think we are very, I think kind of the perception of financial services is that we're numbers and documents, and we're not. It's We are that emotional kind of pillar for people.
Mm-hmm.
So I think a client will never remember us for the rate that was offered at the time. They will be remembered for the support that was given.
Mm-hmm.
So from their broker, from their direct mortgage advisor with a lender.
Mm-hmm.
So I do think it's just so important to just keep that client at the forefront, be kind to each other, lean on each other. There's groups when the last lot of rate rises were happening where there was, lenders were pulling rates left, right, and centre because they had to, because of what was going on with swap rates.
Mm-hmm.
Um, there was a lot of groups, there was a lot of LinkedIn looking after each other. There was a lot of, BDM groups, private group chats. groups on Facebook for people in financial services that include kind of everybody, brokers, BDM, solicitors, everybody
Yeah.
leaning on each other. So for all, it was a really difficult time.
Hmm.
Just seeing that kind of goes, yeah, we're doing the right thing here. We're doing this together.
Yeah.
So
No.
yeah, very big on that.
Yeah, no, 100%. And I think that's the thing that is very hard for people to understand. It's like when rates change, it's not just like rates change. They don't just happen and it blase. When rates change, the broker takes on that stress. The BDM takes on that stress. I think the biggest thing is, like I said, you could be sitting down. So it's like you switch to being on call. You've got to put your own mental health first.
Mm-hmm.
You have to do it. And rates skyrocketing overnight, say. Thankfully, there's been many lenders that have brought in the notices now where you get 2-day warnings and so on.
Yeah, so we've got a broker pledge, which are there's 3 areas.
Hmm.
So it's a dedicated underwriter every step of the way.
Yeah.
We have got we respect your business
Yeah.
and we invest in our processes.
Oh, there we are.
So the respect
Yeah.
your businesses, we do no dual pricing, 24 hours minimum notice on product switches.
And that's exactly what I mean. We need it as an industry.
Mm-hmm.
And then my advice back, obviously because we take on that burden as advisors, we do have, the customers kind of best interest and it's on our shoulders as such
Mm-hmm.
that those rates are going up. We just want to do what's best for them. My advice then to brokers who are speaking to a BDM is like, just understand the BDM are taking that on as well. So I try my best at all times, even if I'm stressed, sometimes I've had to, don't get me wrong, I'd have to apologize to a BDM if maybe I've come across stress, but it's not because I'm taking it out on that BDM. It's because you're just like, this is what we're all like. You're so worried for everyone. Right now, even though rates have just recently increased slightly, it's not in the position it was a few months ago when it was quite bad. Or a few years ago, it was in a seriously bad situation. But it's still important to speak to brokers with respect and like the other way around, vice versa, speak to BDMs with respect. But, it's obviously important to put yourself in a position you're not overworking. You as brokers are not putting your brain into such a position where, you're not giving yourself any rest. So you've got to give yourself a good cut off, I would say, of when, if you're going to do some overtime to make sure that people's mortgage rates are sorted, just do it, but with your own sort of limits. Just give yourself a set 1 or 2 hours after work rather than working until midnight. Otherwise, you're going to be absolutely putting your mental health out the back door. Yeah, so that's everything, Becca. So thank you so much for coming on. Learned quite a lot about some additional USPs that Darlington have recently brought in, specifically the one about lending until age 99. That's really good, and for expats. But yeah, thanks for coming on. Hopefully we'll catch you again. But yeah, all the best, and thank you for showing us around Darlington.
Thank you for having me, Andrew.